These are in listen-only mode.
Good afternoon. This is Sid Haas with LKCS. Thank you for attending our presentation today on credit-based marketing and going for the gold with credit-based marketing. For those of you not familiar with our company, LKCS provides a wide variety of services primarily for financial institutions. While we started as a commercial printer back in the early 1960s, we've grown to, incorporate marketing strategies across all media and all platforms, with an emphasis on utilizing data to improve our clients' marketing results. Today, we're going to be discussing how to use credit data to pinpoint and target your loan efforts, and that can be done across many of these different media platforms. LKCS offers two different solutions for utilizing credit data, and we're going to be discussing both today. The first is credit prospecting, and the second is credit alerting. With credit prospecting, we're identifying your account holders and potential account holders that meet specific credit criteria that would make them good prospects for different loan offers. And we'll share lots of examples today, to show you how we can identify the best possible prospects. Credit alerting utilizes the credit data differently. Instead of being proactive and identifying potential borrowers before they enter the loan market, credit alerting is reactive. And what we're actually doing is finding people that are actively seeking loans from other institutions and other lenders, and we're contacting them with offers of credit from your financial institution to try to capture that business before you lose it to your competitors. In both cases, we're launching what we call a pre-screen campaign. We're using credit bureau data to identify potential borrowers that meet your initial lending criteria. So, we can set up specific demographic and credit-based traits, and they can be, specific to the type of loan that you're looking for. They can be broad-reaching or they can be pinpoint specific. And we can use this data for any type of loan campaign. Mortgage loans, home equity loans, auto loans, credit cards, consumer loans, you name it. Unfortunately, the credit bureaus don't have any data for commercial lenders, however. So when we talk about pre-screen campaigns, we're using a group of credit characteristics to target qualified borrowers. But these are not guaranteed approvals. Even though we'll tell a borrower that they might be pre-approved or pre-qualified or pre-selected for an offer, anybody that receives one of your lending campaigns still needs to complete your full loan application and meet all of your underwriting criteria. So anybody that doesn't meet all of your normal criteria or a loan that you would normally deny, you still have every right to deny, even if you've told somebody that they've been pre-approved for that loan. When we extend these pre-approval offers or these pre-screen offers of credit, you again set the criteria to identify the people that will qualify for a loan based on your specific requirements. And these offers can be sent out via direct mail, email, through your statements, or by outbound phone calls. So you can call both existing account holders and prospects, and we cleanse our prospect lists against the do not call list and all of those things to ensure you're in compliance for calling. And we'll show you today how we can use our own DataFlex reporting engine to help you measure the results of these campaigns. When you set your credit criteria, you need to know that there are hundreds of different data fields available. And what we caution you is to not try to use them all. Typically 3 to 5 criteria are all that you need to hone in on potential borrowers for your different loan campaigns. You have to remember that this is just a pre-screen. You're not looking at an entire credit report yet. And by defining too many criteria, you can limit your potential audience too much. Because you'll find that you'll be eliminating people that still may qualify for a loan when they actually apply for it, in full. So I want to share, I'm not going to read all of these, but I wanted to share some of the most popular credit criteria, with clearly FICO score, being part of probably 100% of these pre-screen campaigns that we run. You have the ability to set the minimum and the maximum FICO scores that you're looking for. We can set up different ranges because these campaigns can obviously fully support risk-based lending and things like that. And we can also access the FICO auto score and different flavors potentially of the credit scores. When it comes to auto loan campaigns, you can see some of the most popular criteria that we use when setting up those types of campaigns. Same is true for mortgage and home equity loans. I mean, this is just a handful of criteria available relating to home lending. And again, we would not recommend using more than about 2 or 3 of these at a time. But to give you an idea, these are some of the most popular ones. And the same is true for credit card campaigns. We have a lot of data relating to credit cards, and certainly all of the general credit attributes and derogatories, so we can make sure to weed out anybody that, that you would normally decline for a loan. That's just one layer of the data that's available to us, because in addition to that credit bureau data, we also have access to all sorts of demographic information, real estate and property information, sophisticated AVM models, and even specific automotive information. So don't be overwhelmed, because, we can help you understand this data and help you determine exactly which data sets and which criteria are most appropriate for the campaign that you are planning to launch. And we'll run counts. We'll let you know exactly how many people, meet the criteria you're setting, and work with you to adjust the criteria to make sure that we hit, the right target for you every time. So I'm going to share some credit prospecting examples with you. And keep in mind that these are just examples. They may not apply to your financial institution, and we can adjust the parameters, that I'm showing here as needed. I just wanted to give you an idea of the flexibility of the data. So when it comes to automobile lending, we execute a lot of auto loan recapture or auto loan refinance campaigns for our clients. So to give you an idea here, we can look for people that have, a credit score of 640 and up, that have an auto loan elsewhere with, 2 to 3 years left on it, or with a specific minimum balance. We can exclude anybody that has late payments in their history or a history of repossessions. And we can specifically identify, based on their credit score and loan term, what rate they would qualify at your institution, and then look to find those people that maybe would save at least $25 a month by refinancing with you. On the flip side, we're also seeing a growing number of leases. So we see more and more people that are leasing their vehicles, and that may be an opportunity for you to get loans from those people as their leases are coming due. So we can identify the people with 3 months or so left on their lease. We know that those people are going to be doing something for another vehicle. They're going to be buying a vehicle. They're going to be leasing another vehicle. They're going to be buying the vehicle that they're currently leasing. So that's the opportunity for you to reach out to them, to let them know that they've been pre-screened or pre-qualified for a loan with your institution, and explain why maybe leasing isn't the best option for them. On the mortgage side, I keep seeing the numbers, rates are still ridiculously low, and there's still quite a few people paying significantly higher mortgage rates than the current rates. So there's still a lot of opportunity for conventional mortgage refinances. And we could also look potentially for those people that have, low mortgage balances, very low LTVs, and offer them a refinance with a home equity loan in the first position. So bringing that, home equity loan onto your books as opposed to maybe a mortgage that you might sell. And obviously there's opportunities for credit card campaigns, looking for people that have, high balances on their credit cards, but are, still paying, making their payments on time. Maybe they haven't used all of their available credit, so they're not abusing their credit, but we can convince them to transfer some of those balances to your credit cards. And there's also the opportunity for all sorts of personal and unsecured loan campaigns, which we've helped a few clients with recently, that have had great success. Credit alerting is a totally different solution. So what happens when we discuss credit alerting is that when an account holder applies for credit anywhere, at another bank or credit union, at an auto dealer, at a mortgage company, through a credit card campaign they received in the mail, whatever it might be, those inquiries are typically sent to one or more of the credit bureaus. And those credit bureaus categorize the inquiry based on the type of product that account holder is seeking. We receive a feed from all of the 3 major credit bureaus every night, and we compare that with the names and addresses of your account holders to identify leads. So we will know which of your account holders applied for credit at any, lender the day before, further screen them to make sure they meet your credit criteria for that type of loan that they're looking for, and respond with a firm offer of credit immediately after identifying the lead. Again, you have the ability to category what types of inquiries you want to target. So maybe you're looking primarily for mortgage loans and credit cards, but not auto loans for some reason. So we can specify those categories. We can set those qualification criteria, again, based on the specific type of loan that person is applying for. And we get the feeds from Equifax, TransUnion, and Experian, so we can maximize the number of potential leads and deliver those offers of credit for you via direct mail or email the same day. And we would also give you a list of account holders to call that same day as well. And what's important to note is that both credit prospecting and credit alerting can be leveraged to acquire new account holders. Rather than starting with a list of names and addresses of your existing account holders, we start with a defined geographical area. So we look at what counties you serve or what cities you serve, what zip codes you want to target, maybe a radius around each of your branches, anything like that. We then set your credit criteria and find those prospective borrowers, and send direct mail pieces to them, or help, give you lists to make outbound phone calls. Email is not an option when it comes to prospective, account holders, because the credit bureaus don't provide email addresses. One strategy to consider is to layer campaigns. When it comes to target marketing, relevance is key. You want to make sure that each of your loan offers is as relevant as possible for each recipient. So I'm going to show you some examples of campaigns that can run together, to help you maximize your investment in these types of campaigns. One offer that you might want to run is a first-time homebuyers offer. This type of campaign would be sent to renters, and again, we would qualify the recipients of the offer based on their credit score and whatever other credit parameters that you want to set, so we can eliminate anybody with a history of late payments, or anybody with foreclosures, or repossessions of vehicles, anything like that. At the same time, we might look at homeowners. So the first campaign is sent specifically to renters. In this case, we're looking at, some kind of credit card, debt consolidation offer. So we're going to look maybe at homeowners that have an available equity of maybe over $50,000, but are carrying maybe $10,000 in credit card debt. That's a match that might be perfect for a home equity loan. Again, we qualify the recipients based on all sorts of credit parameters, so we can determine that they're going to meet your lending guidelines, and then we send them a home equity offer with language regarding, consolidating their credit card debt. At the same time as these other two campaigns, we might look at a separate group of homeowners that maybe have that same $50,000 in equity, but they're not carrying that credit card debt. So this could be a more generalized, home equity offer. Maybe we look for how long they've been in their home and discuss home improvement. Maybe we look to see if they have college-age children and discuss how, home equity financing can be used for education expenses, all sorts of things. What we're doing here is sending different offers to different groups of people at the same time. And these last two offers, the goal is the same for your institution. They both generate home equity loans. But by matching the offer and the language of that mail piece or that email or that phone call with the recipient's specific situation, financial situation, we can improve the results that we're going to get, improve the response rates, and obviously get more people to open loans with you by looking at their personal financial situations. Like I said, these pieces can be sent out as direct mailers. This is an example of a direct mail piece. Everything we do is custom designed, by the way. These aren't templates or anything like that. I just wanted to show you some visuals, so you get an idea of what these look like. So this would be more of a direct mailer. Very common, are letters. So these would be letters that can mail by themselves, or these examples are actually the first page of a statement, an account statement, with the rest of the pages of that account statement appearing after them, but they could be just as easily sent out as separate direct mail pieces. And obviously the credit bureaus are absolutely fine with these offers going out via email. And we typically will always recommend an email component whenever possible, because email is both very inexpensive and it's very easy to track. So when we talk about making outbound phone calls, I can always provide you a list of account holders to call for any of these offers, but we can use email to further qualify those leads. So maybe I send an email to 3,000 people that meet your credit criteria for a home loan, and then I look and I see which of those people actually opened the email, or which ones clicked on links within the email. I can identify those people, and maybe those are the ones that your loan officers call first, because we further qualified them, determined that they are in fact interested in the offer, and then a phone call might be able to spur them to start that application process right over the phone. Whenever we use this credit data, your requirement is that you have to extend what's known as a firm offer of credit. We have to make sure that everything is compliant with the Fair Credit Reporting Act, and obviously LKCS helps with this. When we talk about that, what a firm offer of credit means is that we do have to include language in the mail piece or in the email or in that phone script that the recipient of the offer has been pre-selected, pre-screened, pre-qualified, or pre-approved for a specific type of loan. We have to indicate what type of loan it is, what the minimum dollar amount is that they've been qualified for, and even go as far as rate and term, as much detail as we can with a specific loan offer. What we can't do is just send out a mail piece that says, hey, have you heard about our great auto loan rates? Call us for more details. We have to be more specific. We have to disclose, in an opt-out notice and disclosure, that credit bureau data was used in conjunction, with the offer. There are specific disclosures that will help you craft that need to be put on the mail piece or in the email, or read as part of a phone call. After these campaigns launch, we can help you measure the results. So we can do what's known as a matchback analysis to show you what loans were opened by your campaign recipients, including obviously what rates and what balances and all the information about those loans. We can show you what other products and services were opened by the campaign recipients. So obviously showing you that change in total wallet share, and obviously show which people responded to those campaigns. We use a system that we've developed called DataFlex to provide those reports and give you the insight into these borrowers. And I have a couple of screenshots that show potentially what these reports look like. So they can be, highly graphical if you want them to be, showing graphs of exactly what types of credit card loans or home loans or, auto loans were opened. Again, showing you all of the members, the loan values, loan balances, and percentages. And obviously we can provide the same thing in table format. And we can do the same thing with a credit score summary on all the way down to the individual account holder level. So you would have all of the data that you need to determine how profitable this campaign or these campaigns were for your institution. So when it comes to cost and buying credit data, you need to know that credit bureau data is a volume business. It's all about how much data you purchase or your supplier purchases. So if you were to contact any of the credit bureaus directly and purchase data from them, you'll typically find that they have a minimum charge in the neighborhood of $2,000 to $2,500 per campaign, making the data very expensive. And that's the rub on these campaigns that's out there, is that they cost a lot of money. What you have to understand is that companies like LKCS, we purchase a lot of credit data, so we've negotiated much lower minimum commitments from the bureaus. Instead of a minimum charge of $2,000 or $2,500 per campaign, we have a minimum charge of $750 for all of the data that you purchase within a calendar month. What that allows you to do is purchase data from multiple campaigns within the same month to fulfill the commitment. No campaign is too small. So if you remember, we were talking about auto loans before. We were discussing how we could send out offers to refinance auto loans at other institutions, and then we might also want to look at how many leases were coming due. Well, typically, you're not going to have a high number of leases coming due in a particular month. You might have 20, you might have 50, you might have a couple hundred, but it's very rare that you would have more than that. And obviously, if you were to spend $2,000 or $2,500 to buy those few leads, you'd never make that money up. In our case, if you are already launching some type of other auto campaign or a credit card campaign or a home loan campaign, whatever it might be, you can purchase those additional 20, 50, or 200 leads and together fulfill that $750 minimum. When we look at buying credit data, pricing is very easy to understand when it comes to credit prospecting campaigns. So we simplify it to the point where credit prospecting pricing is based on the number of records that you purchase. In other words, the number of people that meet your specific credit criteria. And a very good guesstimate is that data is going to cost you about 25 cents per record purchased. So remember that credit bureau minimum charge of $750. Basically what that means is you're going to be committing to purchasing about 3,000 records in a month's time, or you're going to end up paying for the equivalent, of that 3,000 records. But 3,000 is not a terribly high quantity. It's not like you have to buy 20,000 records or anything like that. And then obviously the cost for any mail pieces or email campaigns or anything goes on top of that. When you look at a direct mail piece, you can typically expect a letter in an envelope with design and printing and, mailing and postage and everything to cost in the neighborhood of $1.25 per mail piece. So for $1.50 a piece, per person is a good figure for you to use when you're budgeting for these types of campaigns. And that's all inclusive. That's for the data and all of the work needed to actually get them delivered, to people's mailboxes. We can always run list counts and cost estimates for you. So if you have any specific loan campaigns that you're thinking about running, give me a call or shoot me an email. My contact information is going to be up here in a few minutes. And we can discuss the parameters of that campaign. And I can let you know specifically how many people would, meet your qualifications for that campaign, and even help you do a potential analysis as to how many loans you might be able to close. When it comes to credit alerting, where we're monitoring people for credit activity each day, pricing is different. Pricing then is based on the number of people that we're screening each month, the number of people that we're monitoring for those hard credit inquiries. And what we can do there is run what's known as an opportunity analysis, where we'll review your account holders and identify exactly which ones or how many of them, I can't tell you which ones, but how many of them have, had hard credit inquiries for different types of loans in the past month. Give you a breakdown of what types of loans, mortgage loans, auto loans, credit cards that they were in the market for, how many of those people would have met your credit criteria for each of those types of loans, and then from there estimate how many loans you could close each month with the credit alerting program. So it gets a little bit sophisticated in the analysis. It's not something I can tell you over the phone, but if this is something that you're interested in doing, I can get you all the information and show you examples of what these analyses look like. But specifically, we can identify and show you of your account holders exactly how many of them were in the market for a loan in the last month, how many of them would meet your credit criteria for those loans, and based on the averages that we get from our clients, show you how many loans you could close with the program. And that's all I have for you today. So I will stay on the line for any questions. Feel free to type them into that GoToMeeting toolbar. But I appreciate your time, and I look forward to hearing from you with any questions or comments. Thank you very much.